Welcome along to our deep dive. Today we're looking at the financial markets for July 15th, 2025. And really, the story today, it all kind of centers around that June Consumer Price Index report, the CPI.
Yeah, that's right. Basically, how much prices are changing for everyday stuff.
Exactly. And the signal it sent was, well, not what people were hoping for. Stubborn inflation.
Stubborn is the word.
So our goal today for you is to unpack how this one report, this single data point, really shook things up. We saw impacts on the major indexes, individual stock.
And even crypto and commodities, right?
Absolutely.
Yeah.
We want to get under the hood, understand what drove that big market reversal today, and what it might mean for figuring out this changing economic picture.
Well, it's pretty amazing how fast the market mood can just flip, isn't it? That June CPI number, it just came in hotter than anyone really expected.
Right.
And immediately all that hope for, quick interest rate cuts from the central banks kind of evaporated.
Just like that.
Yeah. And that led straight to a pretty broad sell-off. The whole story just shifted instantly from, okay, things are easing up, to, uh-oh, this inflation thing isn't going away.
Yeah, you could really see it in the numbers. The S&P 500, for instance, it finished down, about a 0.16%? And the NASDAQ, the tech stocks, dipped around 0.17%. Even the Dow Jones ended slightly lower. It paints a clear picture, doesn't it? Investors getting cautious.
Definitely. And if you look a little closer, the small cap stocks, they really took a hit.
Oh, yeah.
Russell 2000 futures were down like 2.19%. That's pretty significant. When those smaller, maybe more growth-focused companies drop like that, it often signals investors are worried about the wider economy.
Makes sense.
And look at the VIX, the fear gauge, as they call it. It jumped over 4%.
Wow.
Yeah. It's a pretty clear sign that uncertainty spiked. A lot of people suddenly asking, okay, now what?
So, okay, that's the broad market picture. But what about individual companies? Because, it's interesting. Even with everything pulling back, some big tech names actually did okay.
That's a crucial point.
Like NVIDIA, right? It rallied over 4%. I think there was news about export restrictions to China being lifted.
That's right. And AMD was up too, over 6%. The whole semiconductor space still seems to have some strong momentum behind it.
And the one that really caught my eye was MP Materials, surged nearly 20%. Something about Department of Defense backing on a rare earth deal.
Yeah, huge jump. It just goes to show, doesn't it? Even when the overall market's down, specific company news or sector trends can totally buck the trend.
Right.
It really drives home that idea that you can't just paint everything with the same brush. But on the flip side, there were definitely some big losers too.
Like who?
Well, Newmont, the mining company, dropped almost 6%, and financials like BlackRock and Wells Fargo both slipped over 5%. They missed on earnings.
Earnings season impact too.
Exactly. Wells Fargo even lowered its guidance for the whole year. So you see this real split, this divergence. It really highlights why just picking specific stocks matters right now.
And looking at which stocks were traded the most, NVIDIA was right up there again, wasn't it? Shows investors are still interested in those AI leaders, even on a down day.
For sure, huge volume there. Alphabet was busy too. And MicroStrategy, which, holds a lot of Bitcoin.
So it probably tracked Bitcoin down.
Seems likely, yeah. Speaking of which, Bitcoin did pull back. Dropped to around 116,403 palauzers, down almost 3%. Probably some profit-taking after that big run-up earlier in the month.
Okay.
But Ethereum, interestingly, held up much better. It actually gained over 1%, staying above that $3,000 mark, around $3,044.
Huh. Different story there.
Yeah, maybe different factors at play or just stronger conviction from ETH holders right now. XRP was also down over 3%, more like Bitcoin.
Okay, so a mixed bag in crypto. What about commodities? We saw caution elsewhere, but gold and silver actually went up a bit.
They did, yeah. Both up around 0.3%. Classic safe haven move, right? When uncertainty rises, sometimes precious metals get a little bid.
Makes sense. Oil was a bit weaker, though.
Yeah. Oil softened, settled around $68.85 a barrel. Kind of a mixed demand outlook weighing on it.
But copper stayed strong, didn't it? Settled up over 0.5%.
Remarkably strong, yeah. Its fourth highest close ever, I think. And that's always interesting because copper is often seen as like a barometer for global economic health.
Right, Dr. Copper.
Exactly. So seeing it hold up is, well, it's something to keep an eye on. So if we try and tie all this together, looking at the bigger picture from July 15th, the main takeaway from that CPI report reaction, it seems to be about a shift in strategy.
Okay.
Some of the analysis we looked at, like from the Lotusbee Digest, they often have a slightly different take. They're suggesting that maybe just riding the wave of the big indexes isn't the best plan right now.
Uh-huh.
Instead, they're really emphasizing the need for, and I quote, sharp allocation and discerning stock picking. Basically, being much more selective about where your money goes, finding those specific opportunities.
Right. So thinking about what this all means for you, listening. As we deal with these economic signals constantly shifting and earnings season rolling on, what does it really take to stay focused and stay nimble?
The good question.
How do you apply that in your own learning, your own understanding of these really complex market moves? Maybe think about how today's action, this shift towards sharp allocation, might make you reconsider where you get your market information, or maybe how you filter and interpret those signals. Lots to think about. Thanks for joining us on this deep dive today.